Hey, it is Thursday, September 15th, 2022. Welcome to TechTO Quick Takes. I'm joined by Alex Norman. I'm your host, Alex Reilly. We're doing something a little different today for the episode, which I'm really excited to pilot and see how it goes. We put a call to action out to our community as an Ask Me Anything segment for today, as it was a little bit lighter of a news day. I know you might want to touch on the Adobe news from this morning, Alex. But very excited to see sort of the questions that were asked, get a pulse check on the community, find out what it is they really want to know about, and also great for us to have an understanding of where people's minds are at in tech right now and maybe what they want to see more of. So,
Thanks, Alex. A couple things before you start the questions.
yep.
One is, everyone was expecting post Labor Day the markets to return, a lot of news to happen. It's now 2 weeks after, and it's still very slow, at least in announcements. Doesn't mean transactions aren't happening. And there was a big one today with, not Canadian, but Adobe did buy Figma, and that deal
Yes.
must have been in the work for at least a couple months. Um, I understand why Figma sold. $20 billion is a lot of money.
It's a big check.
Probably like 2-3 more zeros than most people need to be happy. It's kind of surprising because Figma felt like the anti-Adobe in so many ways,
Yeah.
and so it's more I'm surprised that they'd sell from a cultural perspective, while from Adobe perspective, it makes sense. A whole new set of customers, reinforce your area of expertise. Probably will monetize it better by being more aggressive with the SaaS pricing than Figma was by taking more features out. I'm not surprised by that. But look, excited to do this. Excited to see the questions, and let's get going.
Yeah, and I think to keep it fun, we kind of decided I'm just going to rapid fire hit questions at you, and you're just going to go and answer the ones you want. And I'm excited to hear your perspectives.
And I'm going to throw Alex for a loop while we're doing this, since we're doing this live right now. So
Yep.
not if you're listening to the podcast, but if you're watching live, you can ask a question. We'll try to incorporate it into this on the
We
go, or
will.
you can add comments where I can go to get me to go deeper in an answer I provided.
We're throwing out new ways to keep people really engaged. So yes, if you have questions, you can comment them, and I will do my best to keep track and throw them Alex's way. So please do. We also just want to shout out voice form. We had submitted a voice form survey out to our community, and we got some audio answers, which I'll also play live on the show. So something else we're trying for the podcast today, which will be great. Are you ready for the first question, Alex?
Let's go.
Okay. In the current economic downturn, we've been talking about the market a lot. It's obviously really relevant, particularly in tech. Are VCs noticing a slowdown in the number of startups that are emerging, in your opinion?
So, don't know exact nuance of this question, so I'm going to break it down in a couple of ways.
Yeah.
First, are we noticing less startups being founded? And again, this doesn't apply to late stage VCs, but this is like VCs like me that invest really early stage. I would say it's hard to tell because I don't know the ultimate creation of startups. What I do think it feels light is the number of startups with experienced founders. So at this point in 2020, a couple months into what looked like a slowdown, which wasn't, you saw a lot of experienced founders say, you know what, I'm stuck at home. It's time to start a company. And hypothetically, we're in a similar environment. Hey, public comps are down 80%. Private companies, I'm in a late stage company that raised $1 billion last year. Might be stuck at $1 billion for a few years. My opportunity cost of starting something is less. And so I don't think the overall number of startups being started slow down, but I feel like we haven't seen experienced founders that have been at a Shopify or, at a large late stage scale up, or that starts them before and at the acquire leave and start. Because usually recessions are a pretty good time to start. Now we're not officially in a recession, but it sort of feels like
Right.
one. I think the second thing is what we have seen slow down is the financing of early stage startups. So you've got a situation where it seems like the same number of startups, maybe less experienced, a smaller percent of them are experienced founders, and a smaller percent of them are overall being funded.
Okay. So yeah, kind of a two-part answer to that question. Is there anything VCs are doing or looking to do to maybe manage this or like plan for the future, what this looks like? Just maybe like a two-parter to the first question.
So, I think let's break this down again even further. So, there's the capital I have to invest, period, and there's companies I've already invested in,
Yeah.
right? So the capital I have to invest in, you've seen it get a lot more cautious. There's a lot of capitals, hundreds of billions of dollars hypothetically out there to invest in that have been raised or committed over the last few years. And what I'm currently seeing in the market at the early stage, um, I think less deals are getting done.
Yeah.
Less initial checks are getting done. When they're getting done, they're taking longer to get done, and they want to see the whole round together for. And the company has 18 to 24 months versus, hey, we'll give you 350, you'll get $1 million, and you'll have 12 months, 15 months.
Hmm.
So cautious to deploy, cautious to at taking longer to do it. The follow-on investors, so later stage investors,
Yep.
are even slower, doing more diligence. There's no FOMO. Those deals are taking forever to come together. The valuations are down significantly because the public markets are down significantly. So what are those investors doing with their capital is, if they have a choice, if I'm an investor and she wants to invest in another new B round, or I can go to a company she invested in 12 months ago and say, hey, you know what? They've grown 80%. She'll go and try to give that money to a current portfolio company she's known that she's seen how they perform. So the desire to take a risk into an unknown commodity is lower, the
Hmm.
valuations are lower. Now, the other thing is, what are we doing with the money that's already invested? Um, so you know you invested in you're an investor that's invested in a company that just raised 100 million, $1 billion valuation 9 months ago. And that may be in 9 months ago, that could be a company doing as little as 10, 50 million run rate. We're going really fast, has the potential to be really big, has potential really large unit economics. Well, no matter what that company's done, odds are they're not worth $1 billion today. Just if they have to go raise. So worth
Okay.
$1 billion. So there's been a lot of time spent with portfolio companies
Hmm.
to understand how much runway they have, how real, and with that runway, what they're planning to do, could they go support themselves and raise another round? And if that round, how dilutive or down would it be from last time, or would it be, and then how could they change the plan to make so that they can raise another round and hopefully raise a round at the same valuation or higher? So a lot of times, being spent with those portfolio companies, talking to those founders and understanding how they should adjust their plans. That's why you've seen lots of layoffs,
Right.
because the saying is, hey, grow, you're not going to get 100 times X your revenue. Maybe you'll get 40 times. So let's slow down the growth, but have healthier underlying numbers. Um, and that's also another reason you're seeing VCs say, hey, you know what? You have 24 months. You're growing really quickly. We'll give you another 6 months runway. So when you go raise in 30 months, hopefully the market's recovered. You've grown a
Hmm.
bit more. Your unit economics, so you can have a better chance of raising an up round. So those are reactions: less risk taking, slower moving investments,
Yeah.
working with the companies to make sure they can grow into their valuations.
What about
And
Canada versus like the US? Do you think obviously the process here is going to be different and maybe tends to be slightly more dragged out? It just, in your opinion, what do you think about that or the difference?
so with the investors that are founders is different. I think with investors, to a certain extent, it's pretty similar as always was. You'll see American, maybe. I think at the early stage, the difference is there's a lot less angels here, and they've all disappeared. So
Yeah.
it's probably stopped. So there's probably even less deals than have historically gone on in the early stage relative to the states. Has fallen more, is my guess. I think the general reactions being the same, and in some cases being more extreme in the US, where I know of funds that have raised big funds and are saying, hey, we're going to slow down our deployment. And it's not a US versus Canada, it's just a funds partners deciding, hey, do we need to, how do we react to this? And it's a bit all over the board. I think the bigger difference is what I'm seeing out of the States is the later stage companies. Some of the reactions, what I haven't seen here is let's get more aggressive. But I've spoken to quite a few, or I've heard of quite a few late stage companies in the States are like, you know what? To justify this valuation and to make sense of this market, we're gonna get more aggressive. We're gonna grow faster. We're gonna still cut and get right size our company, but we're gonna still aim to increase our speed of growth. We're gonna acquire companies and just a big more bold bets. I've seen that's the one change I've seen where lots just across the board has been a lot of cutting, and not many people are talking about growing more aggressively. But in the States, I've talked to some founders that heard of founders that she's saying, hey, this is the time, everyone else is weak, let's double, like let's put a foot to the the pedal and grow faster.
Right. I kind of threw that one at you.
That's fine.
I know, I just want to keep you on your toes a bit, but thanks. That was also something I'm hearing a lot about is just the comparison. We have an audio question now
Cool.
for this next one for you. So I'll play it for you right now.
If a VC says no or not right now, what tips and tricks do you have to maintain a warm relationship in an authentic way if you are looking to reapproach them in the future? If
So this is a tough one to answer because a
Yeah.
no, all no's or not nows are not the same thing.
Okay.
VCs generally don't have a vested interest in saying no explicitly because, especially earlier stage you are, and the more generalist the VC is, they have a vested interest in staying around the hoop. That in case something gets interesting, they could invest you. And very few VCs are going to say no and say it's we just don't believe in the team, right? Generally, if it is really a not now,
Mm-hmm.
and I would ask what would make this opportunity interesting because maybe it is you're a bit too early. They like the founders, um, they like uh, they like the founders, they like the area, but you might be too early for them. So in that case, they might say, you know what, we want to see you get to 500,000 revenue. In that case, put them an investor up. All good founders, or no, sorry, not good founders. I recommend all founders. It's a
Mm-hmm.
process for them to have like an update email once a month to investors, and they could have that another version that goes out to potential investors. So that's a good way to keep them up to date. You might
Right.
want to have meetings. Now, people say maybe you don't want to do that because it only has downside, but I do believe some investors, will get excited about starting preempt a deal. I think the other thing is to focus on the people that give you that answer, don't just give you no or not now, because it's very hard to change someone's mind.
Yeah.
It's a simple truth. Unlike other places in life, most investors are investing in 10, 12 deals a year.
Yeah.
And if they've said no to something, it's going to have to be drastic to change them. And you're better
Probably
off.
not a good fit. Yeah.
Yeah, yeah, it might not be a good fit. You're better off invest. There's hundreds or thousands of VCs, and you have to find a 50 or 60 that can be the 100 that are in your sweet spot, and hopefully 5 or 10 say, you know what, not if they say not now, they say this is what we need to see, and you can focus on those ones. So
Right.
that's my feel. Uh, Alex, I see someone sent a question in. Do you want to put that up on
Sure.
screen?
So it says VCs emerging less startups. Inflation influences the rates of business operations. Management participation in risk negotiations depend on class and market range. Just different perspective of time scale, I guess. That's what it says.
Yeah. So I guess I'm not sure what the exact question is there. And then it says looks for rebranding. Uh, yeah, I think inflation does impact startups, just because your capital goes less further and there's pressure
Yes.
across the board.
Yep.
Uh, yeah, so not exactly what that question is. Magomed, if you're listening and can clarify what you want answered, I will happy to
Yeah. And
give you
please,
more.
yeah, anyone just joining too, send us your questions. I'm going to rapid fire throw them at Alex Norman. This is a great Ask Me Anything session. Okay, and I think just to go back to maybe what you were saying about how to kind of keep maybe the relationship warm if you need to reach out. If it is obviously outright a no, I think we've had these conversations before where you want to be having a VC that understands your business and obviously believes that it's going to be a good fit on both sides. So maybe the outright no is just a good opportunity for you to look elsewhere. It's not really a try harder and try and come back and change my mind. That's what you're saying. Okay. Okay. Good to know. So someone reached out and had asked, they'd be curious to know what trends you're seeing, Alex, in the startup market right now and what your view is on the next 12 months.
So trends, nothing surprising here. A lot of people doing climate, crypto, despite the downturn, seems to have a lot of interest more on infrastructure.
Mm-hmm.
I think the big thing you're seeing is less copycats being funded, people realizing they have to be more tenacious and just sort of return to normal. Like people realizing that the easy cash is gone,
Okay.
that being the fifth 15-minute grocery delivery company in a city startup is not probably the way. So I think that's a macro thing. But otherwise, And I think the next 12 months, it's going to be more the same. It's, I think you'll start seeing people taking a bit, depending, and then it depends on the economy and what happens, right? Like if we get a bad recession, you might see the type of startups focus more on cost savings and stuff like that. If you see risk on coming a bit more, the valuations may go up, but I don't see anything drastically changing in 12 months.
Okay. And to just completely switch gears, we have a question that's not tech related or related to the market at all, but someone wanted to know what your favorite hot sauce was.
Sriracha. And unfortunately with sriracha, it's almost impossible to find in the city right now in grocery stores. So if anyone has some sriracha and wants to send me a bottle, you can send me an email and we'll arrange a transaction.
Oh my gosh. This is not an ad for sriracha. You just really like it. But if anyone listening from the team wants to send Alex Norman some, he likes it and is in desperate need. So I like it. We're keeping things light and just throwing other kinds of questions your way. Back to the tech side of things. How would you know if your idea attracts customers? How can maybe people get indicators?
So this could be a whole course or multiple podcasts itself. The simple ways: go to the market, build a prototype, build a landing page, ask for money, and let the customers tell you they want the product. There's a bunch of nuances how to do this right, but sitting at home or even going and asking your friends for it won't do it. Find your customer, get in front of her, show what you're building, ask for commitment, and that's the strongest way. If people want to pay for what you're building, even if it's not, especially when it's not built, but it solves a problem they need, that's the best way if it's going to attract customers. Then there's a whole bunch of questions. Can you attract them cost effectively? Can you charge them enough? That's my approach. But again, I'd say there's a bunch of, look up customer development, and there's a bunch of stuff out there.
Okay. I think that's really good feedback as well. And maybe something we dive into on another episode, or we do some other piece of content around that, because I know you could go much deeper into that question specifically. Just to take 5 for a second, I do want to acknowledge the Masters of Management in Artificial Intelligence program at the Smith School, who are kindly sponsoring today's episode. Harnessing AI's potential for competitive performance requires a new type of professional, one who not only understands the capacity of the science, but has the expertise to apply it to organizational needs and strategies. The Master of Management in Artificial Intelligence program from Queen's University's Smith School of Business will help you develop the skills to navigate the ethical, economic, and societal implications of AI implementation. And this 12-month program can be completed while you continue to work full-time. Visit smithqueens.com/AI degree to learn more about how you can join their next class. As always, I will include that in the show notes, so please check them out. And thank you again to them for sponsoring today's episode. Ready for more questions?
Yeah, let's go for it.
Okay. So Alex, how do I decide if I should focus on Canada first or go straight to the US or even to another market?
So I think it just depends on how you reach your customers, right? And how you get the feedback. Depends on regulations, depends on the moat. So there's not one answer fits all. Generally, if I were to say generalization, I'd say consumer, you probably want to target the States right away, because especially if it's digital first, if it's not direct to consumer. I think if it's business to business, depends on a bunch of other things. And, the advantage of starting in Canada is you can do customer development in person and you might understand the cultural differences. I say the biggest 2 challenges not targeting the US first and targeting Canada is, one is there's a skepticism that it translates outside of Canada. So it makes it harder to raise further rounds if you need venture capital. And second of all, our market is just generally a lot less competitive. So I've seen a lot of companies start here, have a product that works here, the unit economics work, they go to the States, and especially in consumer, but just generally the cost of acquiring customers are significantly more, and all of a sudden their unit economics are upside down. So the 2 huge advantages for the States is more competitive. So if you can win there, you can probably win everywhere else. And 2, it has more credibility with potential investors. But again, it all comes down to nuances. Like if you're starting a neobank, it has to be in a jurisdiction where you want to invest the time and get build the regulatory compliances and stuff like that. So, but yeah, consumer generally focus States, business depends.
Okay. It's good to know because I know that's probably a question on a lot of founders or teams' minds when they're trying to determine which market would be most beneficial for their product. Next question is, how could someone connect with other tech ecosystems better from coast to coast? And that could be generally as in teams, individuals, companies.
So one reason we exist is to do that. It's our newsletter and stuff like that. I think generally the biggest problem in the Canadian ecosystems is they get very insular. So they talk to each other. They don't talk to other ecosystems and they don't
Mhm.
want to get feedback. And it's true for a lot of them. So I'd say just try to cross pollinate with ideas and founders from other places, share stories about successful companies across the country. And I think the second thing is everyone just looks south, either to New York or San Francisco. And we should be looking for best practices here. We have a lot to learn from those ecosystems, but it's a contact sport. Reach out to people, go visit, talk to people. And I think we have to get the weird thing is in Canada, every region wants to be known as the expert. I hear from town of Innisfil, oh, we want to be known as Tech Hub. It's like, who cares where it's from? If it's let's start the national level and say this is Canadian and learn and be proud that Canada has tech and like make it a national thing. Don't have another solution other than that, but that's tell people about our newsletter so they can learn from each other because we do try to feature companies from across Canada.
Exactly, we do. I mean, I wasn't going to segue into the newsletter yet, but we might as well. I think it's, as you said, it's a great place for people to just have a good tap on what is happening in our community and understand what's going on and really learn how to connect with people and how to network. Our events are also great for that as well. If you're, in Toronto, Montreal, Vancouver, I know we're trying to expand eventually to more cities. So that's another great way to connect. I want to kind of throw a different question at you based on just talking about the networking and trying to meet people and expand horizons in the ecosystem. I've had some folks in the past tell me that networking is just so daunting to them, especially after everything was digital. We were at home, we were not going to in person networking events. Would you have other suggestions on ways for people to, maybe if they didn't want to do so much of the event stuff or go to those mixers or do anything like that? Is there something that you would recommend to people that find it very, very daunting and maybe don't have the best?
So is the goal to build a community around supporters or to get knowledge?
I would say both. I would say to get knowledge or even just
So
find work because I
knowledge is
know
different way people get. It's all, again, I'm a big believer. You find like I can't stand videos. I find it a lossy, slow version of compression to get information into my head. So
okay.
I read a ton. I find a bunch of different sources, and I built a thing that probably gets me to like 200 to 300 articles I could look at a day, and then go down rabbit holes. But that benefits for me. So learn how you learn, and then find a way to get that to you. I think for like the building connectivity, like I'm actually not a big networker. I actually if you see Jason or me at TechTO, Jason's around a room, working a room, talking to people, and I'm sort of sitting in my corner talking to 2-3 people. Again, I've been in the ecosystem now for 20 years, so I have advantages where one thing I would say you do is if you don't want to do big mass people, find 2-3 people from your office or where you're working or the school you went to. Say, let's do dinner 6 people every couple of weeks, and get each one to bring someone you don't know and build one-to-one relationships. Go to Reddit, go to other places. It depends what you're trying to get out of it. There's 100 different ways to do anything, and you should just do what you're comfortable. Like, I've sort of built a funnel where people come to me versus me going to them because I would never do
Right.
that.
Right.
So it's really knowing yourself.
Know yourself. And I would even add to that, utilize the leadership on your team because they're, as you said, a lot more people than I do. And it's nice to know that you can obviously lean on leadership on your team as well to get to know and get out there and meet people. So next question that I have for you. How much is the TechTO community thinking about green software? And does this conversation exist in the Canadian tech ecosystem in general?
So I think this means climate tech. It's definitely buzzy. It's definitely a lot of conversation happening. Someone asked me why we haven't featured more companies in our newsletter or on stage yet. I think it's a matter of time. It's really early. I see a lot of dashboards. I see a lot of hardware. But I'm starting to see new stuff out there. It's a global conversation. There's a lot of interest. Everyone wants to invest in it. Everyone wants to start the next being, save the climate. It's happening. Yeah.
Okay. Which companies, in your opinion, are receiving the most funding right now?
Don't know. Because the most funding would be late stage.
Yep.
And late stage is slow right now. I'm not privy to those conversations. I don't invest in that space. Like I'll hear about it later on and probably before it goes to the market. Not hearing much right now, and I don't know. So I don't know who they are. Like, and I think particularly in Canada, like you know, if you're gonna say who's the most, it's the companies that are ready, unicorn that are ready to raise or need more money, because they get a $200 million check versus this early stage, which is a bunch of $500,000, $2 million checks. So really don't know.
Okay, another audio question for you. I'm gonna play it right now.
What is the most important thing when it comes to raising venture capital?
Most important thing.
I'll assume this is early stage. I think it's
that. Yep.
It's three things: the founding team, and why are they the right people for this opportunity? The value they're creating in the industry, is it big enough, and can they capture it with a real market share eventually? And then how do they communicate this vision? So it's those three things.
Okay.
Credible the right team for the right opportunity, make the opportunities big enough, and they can actually eventually get unit economics, and then they can communicate this in a credible way with proof. If you don't have one of those three, you're not raising right now.
Got it. Okay, good to know. I know you can't tell the future, none of us can, but when do you foresee layoffs starting to slow down? We're still talking about this. Just off the top of your head, if you have anything to share on that.
Depends on the economy.
Tough one.
I don't know. And again, I think the smartest, biggest, like I think it'll be different layoffs at different times. Like the biggest companies, the most visible companies, the layoffs will end sooner than the whole industry, because they're the ones that need to cut them, have them, like when Shopify cuts, they cut big and they cut early, and that's visible. When a A-series company with 50 people cuts 5 people, it's not as obvious, and it might be later on, depending on when they raised and what happens in the market. But I don't think I don't see it happening tomorrow, but I don't know if it's we're at the peak now, or if we're peaks in 12 months. But eventually, either everyone's right sized, or the market, we get back to the boom times. So I don't think we're getting to boom times this year.
Okay. And last question for you. I know we're almost at time. What are seed funds currently focused on when it comes to deploying capital?
Again, varied, depends on the size of the size, location, and the focus of the seed fund. But if you go back to my answer, just generally, depending, again, with the focus of geographic or industry. So, if someone's focusing only on ag tech in Saskatchewan, that's what they're focused on. But it comes back to founders. I think it's just, can this produce economic returns for me? So can I believe this team can do it? Is there, if we invest the time, is there a big enough prize, and can they make money off that?
Right. Well, thanks. This was great. I loved the interaction. What did you think of the segment, Alex?
I'm happy to do it. It's fun. I'd like to, maybe get some more, questions. Happy if someone wants to ask about specific sectors or specific companies, or more trends. The more nuanced the question is, the more detail we can get an answer.
Absolutely.
What do you think?
I thought it was great. And again, great for me to get a pulse on what people care most about and what they want to know. I just think in general for what we're trying to do. I do just want to touch on what we have coming up, more ways for people to make those connections aside from our newsletter and everything we're doing. We have a virtual event next week, Go Public Readiness, sponsored by M&P. A great way for anyone that wants to learn more about taking their company public. It's going to be completely focused conversation around that. And for anyone who couldn't attend last night's in real life event at 111, we have another one coming up on October 3rd. Very excited. Last night was sold out. Hugely successful end of summer event. Alex, you and Jason were both there. I was there. It was a lot of fun. So,
and there was a lot of knowledge dropped in the fireside with Candace from Disco. Unfortunately, our videographer no-showed us, but I would love to capture some of it, because she just had insight after insight.
Definitely. There was the speaking and the conversation was absolutely top notch. So if you liked it, definitely come back on October 3rd. Thanks as always, Alex, for your insight and joining us again, answering these questions. Don't forget to like and subscribe wherever you're watching or listening to this episode. We will be back next week with more TechTO quick takes. In the meantime, if you would like your questions answered live on the show, make sure to send us to them on social. We'll put out another call to action again. And until then, we'll see you on the inside.
We're in the business of delivering impossible things. We're in the business of delivering things that nobody's ever seen before.
If you build that culture, you'll come up with really cool and innovative stuff, and literally could be the next multi-billion-dollar idea. So this conversation is largely going to be about scaling yourself and scaling your leadership team.
I want to talk about one of the biggest struggles that I think a lot of startups face early on, which is building initial traction.